Well, hello guys. Welcome to this Sunday live stream. I'm going to be talking about the Bitcoin price action, and I have to say it feels so good to be able to just deep dive into the charts again. No more chasing headlines about who's dropping bombs where, who's violating ceasefire agreements, Powell testifying, all of that stuff. I'm so excited that it's over, at least for now, and we're getting back to doing what we do best, which is trading price action, having some fun, and making some money. Well, hopefully making some money. So today we're going to do a top-down analysis on Bitcoin. We're going to peel back the layers and see where we truly stand in this crazy cycle so far. And I'm going to kick things off by looking at a pattern that suggests we might be deeper into this bull run than some might think. So once I get through that, we're going to zoom in on some crucial weekly and 4-hour levels that are absolutely key for Bitcoin's immediate future. And then, of course, I'll go over what I'm expecting for the market open this week, because I know that's what you guys turn up on Sunday for. So stick around if you're new here. Welcome. I'm Annie. This is Trade Travel Chill. And if you're returning, welcome back. Be sure to hit that like button, especially if you're here live, as it really helps YouTube to know that this content is what people are looking for, and then it sends it out to more people who really need to hear it. All right, so if you guys have done that, we can get right into it, and I'm going to start by zooming out pretty macro first. I'm actually going to take you on a little journey back through the entire cycle so far, and we're starting on the weekly time frame. And what I've got here on my chart is back to the beginning, to 2010. Okay, and if you know this channel, or if you know kind of the basics of the trading method that we trade here at TTC, then you might understand that we're always looking for price action that consists of bursts that happen in threes. Okay, that's a very basic rule, and we usually apply that to day trading. But when we're in a parabolic part of a cycle, it will feed up into higher time frames. And that's what I want to show you, is how that has played out in over each bull market so far. So I'm on a logarithmic chart here, and going back to 2010, what you can see here is that these are the three bursts of price action where we saw high volume show up. So on my candlestick, I have an indicator added that's called, well, this particular one is a custom indicator that we give to members inside a TTC, but there is one that we created if you're not a member yet, because it's only yet, right? One day you will be. And it's this one here, PVSRA candles auto override by us. So this will give you the same thing. But what I want to point out about this is that when we're counting bursts in price action, we're looking for this specific indicator to change the color of the candles from white and gray here to green and blue if it's moving to the upside, and magenta and red if it's moving to the downside. Now, I won't go into too much detail about that, why that is, but essentially that's a burst in volume, and the burst in volume is how we count those levels. So if you're looking back in 2010, this was the bull market, the initial bull market, and you can see that that's what happened, right? We had, oh, what was that noise? What was that noise? Did you guys hear it? Because if it keeps doing that, then I'm going to get complaints on this video. Wait, I have to figure it out. It may have been TradingView. All right, let's see if it goes away. So, what was I saying? Now I've lost my train of thought. Yes. So in between the bursts, you will have fairly decent pullbacks, right? Now, this was the first cycle, so the pullbacks will be huge. Like, for example, here, it was 72%. But look, in this cycle here, Bitcoin was a meme coin, all right? It was nothing. Like, it was brand new. No one knew what it was. So of course the pullbacks are going to be huge. This one was 46%. And then once you have the three bursts, that's when we went into the actual bear market, where we had a big, like, 93% drop. Okay. When we have a look at the second cycle, which is where people well, not really, actually. It was still very much early adopters. In the second cycle, it's the same thing. So you can see the burst of volume through here, consolidation with just sideways white and gray candles, burst of volume through here, burst of volume through here, and that took it to that cycle's top at about $1,100, right? Probably the dishwasher. This time it wasn't. You know, I have to tell you, I went to put on the washing machine right like an hour before. My washing machine takes 90 minutes, and I'm like, nah, don't do it because it's going to stop right in the middle of the stream. So I have to wash my clothes after after this stream. But it's funny that you remember that from the last one. So anyway, I think it was TradingView. I think that sound was TradingView. So anyway, so in this cycle, we can see the same thing, right? Burst of volume, burst of volume, burst of volume, little pullbacks in between until the cycle actually ends. And again, this doesn't look huge because I'm on a logarithmic chart, but this pullback that was the bear market was an 85% decline, okay? So that basically quantifies that as being that cycle top. And then we go into the next one. Now, this was where, you know, a lot of people started knowing about Bitcoin. This was the 2015 cycle. And it's the same thing. We have the burst of volume, pullback, burst of volume, little pullback here, burst of volume. And then we have the cycle top and our 83% bear market drawdown. All right. So are you guys getting the picture? Do you understand where I'm going with this? The last cycle. Now, this is the last cycle where a lot of people know about. Didn't hear anything even in playback. Okay, that's good. I do have I did mute the tab, so it shouldn't come up again, but I did have what do you call it? Noise cancellation, so maybe that's why you guys didn't hear it. But anyway, so in this cycle, which was the 2018 2019 cycle, same thing. So we have the burst of volume, our in-between pullback, burst of volume, and then the final burst of volume. Now, this cycle is interesting because this was where in this phase here, a lot of people now to this day, actually one other thing, if you can just let me know in the comments, because I just changed my computer because it broke is the moral of the story. My streaming program broke, and that's why I haven't been able to go live. And I have spent like a month trying to figure it out, and I can't because I don't want to be a tech person. I want to be a trader. And so I've had to go through this whole process of trying to figure it out, and I couldn't. So I ended up just buying a new computer. And in the end, that wasn't even the problem. It was my actual like streaming thing, whatever it's called, is faulty. So I bought the new computer for nothing. But the reason I'm telling you that is because I now had to reset all the levels on everything. So can you let me know if the volume is okay? If I'm too loud, I can turn it down. Yeah, or whatever. But just let me know in the comments if the volume is okay, because it's the only thing I can't tell when I'm doing the setup myself. So yeah, leave me a comment, let me know. Now, what I was saying about this cycle here was a lot of people say that this wasn't the real top and that this here was the real top. And I don't personally subscribe to that. I don't think that's actually right. I think this was the real top. It is the all-time high. It is where price went. And I just think that this was a sign of Bitcoin maturing, meaning that the more an asset matures, the less chance you're going to get. Okay, everyone says good. Thank you guys, appreciate it. The more an asset matures, the more it changes, and you no longer get the blow off tops. And what usually does tend to end a cycle then is something like a double top. So I actually do think this was the true high of the last, was it the last? Yeah, the last cycle. And therefore it counts. So anyway, in this cycle here, you can see the three burst pretty clearly. And then we come to this current cycle. So again, going from the bear market bottom, you can see we've got our burst of volume through here. Then we've got the pullback, burst of volume through here, pullback, and now we're in the third phase of the burst of volume. So I do think that that is a sign to us that we are definitely in the late stages of this cycle. And I've been saying it on this channel for a long time that I think when Bitcoin, anytime Bitcoin is above 100K, it doesn't matter if it's 101, 103, 110, it doesn't matter. In the long-term scheme of things, it is a good area to scale out. if that's something you want to do this cycle, which is another thing I have to say, because not everybody has the same goals for their crypto. So obviously you can't just give a blanket statement that applies to everyone. If you're somebody who does want to take profit and exit this cycle, and for whatever reason, then this applies what I'm saying to you. But if you are a multi-cycle holder, you don't have to worry about this. If you are not planning to sell and you're happy to sit through, another potential 80% drawdown, if we ever see those again, fine, just keep it. I definitely keep a lot of my Bitcoin and ride it through bear markets, and I don't care. So yeah, it's, each to their own. But my point being that if you are somebody who wants to take the profit, I personally don't think that starting to take slow profits, slowly scaling out over this part here, whether Bitcoin goes to 120, 130, 140, it's kind of irrelevant. If you don't think that Bitcoin's going to 200K, then scaling out slowly anytime it reaches a local high above 100K is going to save your portfolio when the eventual end does come, and one day you just get a big 40% drop and then you can't sell, it's under 100K and it doesn't come back. So for the purpose of wanting to secure profits for this cycle, I do think that we are definitely in the late stage of the Bitcoin cycle. Okay, so that's the first thing that I wanted to show you. Now, let me just go through my notes, see what else I wanted to show you. Actually, so that also lines up with this from Willy Woo, who I love watching reading Willy Woo stuff on Twitter. He's just so intelligent. But he's showing this risk model here. And he says, for macro cycle investors, our risk model, which measures drops BTC liquidity, is hinting BTC has entered its late phase of its bull market. There's still upside to go, which is also what I'm saying, but we are in the late phases of the bull market. We expect a BTC bear market once global macro markets turn. So these are all your warning signs, and I think that this cycle is going to be very hard for anyone to pick the top. And if someone does happen to do that, when the time comes, it's more likely going to be a luck thing, because it has been a very difficult cycle. And as someone who's been in 3 cycles, I can tell you this has definitely been one of the hardest ones. Okay. So anyway, point being that these 3 hits on a weekly time frame for Bitcoin, it's happened so far every cycle, and therefore it's something worth paying attention to. So before I move on, what I want to know from you guys is, when I zoom out on this, are you seeing it? Like, for people who have been watching this channel for a while, are you starting to identify that things happen in bursts of 3s in your own TA? Let me know in the comments, because it really helps you to identify where to start looking for potential reversals. Whether those reversals turn out to be pullbacks or full-blown reversals, that's a whole other story. But are you guys starting to see it? Dean says Australian accent. Yeah, Aussie and proud. Altcoins are next. July is still flat. Yeah, it is. Summer lull. Yep. Q4 question mark. Not sure what that means. This cycle has the most corporate purchases. Behavior may be different. That's true too. Well, behavior may be different, but it also that might mean that just the 90% drawdowns don't happen. That's possible, but it also could be if we go into a recession, which I don't want to go on that rant now because I want to save that for another video, but it could be worse. Yes. JK is calling the top September 18, 9 p.m. CET. Keep that in your diary, guys. Super cycle possible? I don't think so, but I'll discuss that in another video. Laurie says 100%. Okay, perfect. So now that we've done that, I want to then just have a look at a key level on the weekly time frame. And I'm going to work my way down from here. So right now, the current weekly candle, which still has just under 10 hours to go, it's looking pretty good, right? Like, if we get a bullish engulfing close, that's pretty good. That's pretty bullish. But I think the level here is around 106K. So we need this weekly candle to close in the next just under 10 hours. We need it to be over 106K. And I'm going to discuss why that is when we get down to the 4-hour time frame. But before I do that, let's just have a look at the daily time frame, because I think the daily time frame is currently giving the biggest clue here. And that is the fact that the daily time frame is in a bull flag right now, and it's very similar to this January to April price action here. Okay, well, similar but not. This was a wedge. This is a bull flag. Now, when we zoom in on the current range, we can see that we've had multiple touches to the bottom and a couple touches to the top, and looks like we're potentially attempting a third. This major liquidation zone was the zone that I was talking about on this channel before this happened for a long time, and we have taken that out. So we do need to relook at that, which I'll do in a second. However, what could happen best case scenario, which so far, I hate saying that because so far this cycle, we've never gotten best case scenario. Like I'll tell you why I think that is as well, because, you know, I'll tell you about that later. But, you know, to make trading easy for us, which I don't think is the intention, is we would get a higher low. And what would just be so juicy about that, before we break out, I mean, what would be so juicy about that would be if that higher low took us somewhere here. And let me just make this, yeah, which is around, say, 103K. And the reason why that would be so, let's say 103 to about, yeah, 103, 104 and a half. Okay, let's make it a range. Let's make it an actual range for 103. What did I say? I forget. Anyway, doesn't matter. Let me just make this an area of interest. Oh, Jesus, what have I done? 1 second. We'll make this an area of interest because it's around 50% of the vector and also the current daily 50 EMA. Okay, so where are we now? We're, yeah, about 102.5 to 104.5. Okay, let's make it that range. That would be so perfect, because if you understand the way that flags work, a higher low within the flag is an aggressive entry. It's where aggressive traders take their entries. Conservative traders don't. They wait for the breakout and then they wait for the retest to enter, right? That confirms the flag. But aggressive traders go in within the flag. So this would be best case scenario. And why I say that may not happen is because we haven't had many chances of best case scenario this cycle. What we've had is liquidation hunts to the downside, which has turned out to be the best case to get in, like this one here was it last week or week before? This one here as well, back when we were in that wedge, right? The liquidation hunts to the downside have been the best opportunity to buy in this cycle. And like I said, I'm going to tell you why in a second. But, you know, if we get lucky, something like that, as long as we didn't then break below that area, I think that would be a really good chance to get in. Look, we could actually break below, to be honest. If we even came back to the bottom of this candle here, so at about, say, 101K, that would still be a higher low, actually. And it still would actually count, but it would just scare a lot of people. So, yeah, keep those two areas in mind. I think that would be best case scenario if you're not long. And the other thing I want to just quickly do is have a look at our liquidation zones. People like Raul Paul think the cycle will top out early next year in line with global macro liquidity. What are your thoughts? I don't personally think we're going to go into next year at this point in time, but I'll tell you what I'll do if I'm wrong about that. I'll come back to it. Remind me if I don't, because when I'm live, I get quite nervous. But I'm going to try and make this a habit to go live because I want to interact with you guys. Let's just have a quick talk. I want to interact with you guys. And I also, if I just go live instead of pre-recording my content, it's going to take me half the amount of hours because I can't edit. So yeah, if you prefer that I just go live, and also sometimes, like, you guys have no idea, sometimes when I do content and I go all the way down to the 15-minute time frame, once I've done that, it takes 2 hours to edit the video and then get it out. And in that 2 hours, so often the trade plays out and then I can't post the video. And I'm just so annoyed. And if I'm live, then we can like get it if it happens to happen at that time. So yeah, anyway, but the only thing is you have to put up with my rambling if I go live, and because I can't edit that out, and I say a lot. So yeah, anyway, that's what I want. Let me know if that suits you better as well. I'm still going to keep them as short and as detailed as I can though. So looking at these major liquidity zones, now knowing that that one was taken out, the next really big major one is down here. Look, we'd need a big we'd need a big event to happen in order for us to worry about it, but we always have to be aware of it. It's between about 82 to 88, okay? Live is great. Just go live. I don't care if you mess up. Oh, thank you. I appreciate that. Ramble on. Love the live. It's at the perfect time for me. Okay. All right. Done. Then we've decided what we're doing. The other area is around the 200 EMA as well. So that's between 92 to about 96, let's say. Okay. So we've got to keep an eye on these two levels. But that's really only going to happen if we have a big leverage buildup, or B, more macro scary news. Like, let's just say, I don't know. I mean, look, to be honest with you, I think even if we had a war flare up again, I still don't think we would go down there, because I think it usually, war news, it's an initial reaction that scares people, but once it becomes a part of life, which is really sad to say, but once it becomes a part of life, traders stop caring and they just trade what they see. So anyway, we have to be aware of these levels, but I'm not too worried about them for now. I'm more focused on best case scenario, we get this before we break out. But like I said, also this cycle, we've not had exactly what we want, so we may not. Now, let me just because I don't want this to show up on lower time frames when we go there. And then I'm going to show you why the 4 hour and that 106K matters so much. So let me just do all of this. Okay. So I'm going to get off this heat map now that we've seen it. And let's go to the 4 hour. So on the 4 hour, this is the tricky thing. Okay. The 4 hour, as you can see, I mentioned before, the best times to buy have been the liquidation hunts to the downside. This is one. They're not creating W formations. They're creating V bottoms. V bottoms mean you have to act with confidence. So you got to get good at learning to identify them. But this was a V bottom, then we moved to the upside. This here was also a V bottom, then we moved to the upside. Now that 106K that I spoke about, let me put it back on. No. Actually, I do want to show you that. I'll come back to that. So 106K, right? So the reason why I'm saying it's so important is because look, on the 4 hour time frame, it's around about the 50 EMA, and currently price is consolidating above it after a V bottom. So what that means is that on the 4 hour time frame, we're in we call it a board meeting at TTC, because it's where we say the market makers go into a board meeting to decide what they're going to do next. But then the community also changed it to board as in BORED, because it's boring price action and you can't trade it. So however you want to interpret it, the normal traders who aren't crazy like us, they call it consolidation. Okay. So essentially we're in the board meeting after a V bottom. Now, if the levels are to feed up to the higher time frames, then that means that there should be 2 more levels to come on the 4 hour time frame. But as you can see, I've got this area here marked, which is my area of interest. And the reason why is because I don't think we can, I don't think we can have that much confidence that we are going to feed up the levels to the 4 hour time frame whilst the price is under this area of interest. And the reason for that is because with all of these V bottoms here and the way the price action is behaving now with the tops, is we're creating lower highs each time. So again, that could be because it's in a daily time frame flag. But at this point in time, it hasn't broken. So it is possible we've got 1 touch here, 2 touches here, and looks like we're creating the 3rd today, which we know today being, leading into the weekly open is where we start looking for the false move. So it's possible that we reject here and then, have our pullback to eventually, hopefully, create a higher low and continue the cycle. But whilst the price is under this area of interest, we can't rule out that we're not going to pull back first. We really need to get above there before we get too excited, okay? So on the 4-hour time frame, we want to stay above 106. It's not terrible if we don't, because we also have this blue vector here, but ideally we want to stay above 106 because that keeps us above the consolidation. It keeps the market structure intact. It keeps us above the 50 EMA. And it would be more likely, if all of those things happen, that we will continue to the upside. If we break below it, that bias changes and we'll probably switch to the daily bias of getting the pullback to see if that flag actually holds. Now, what else did I want to show? So 106, I've told you. Okay, so with all of that in mind, let's go down to a lower time frame. But actually, before I do that, let me just quickly mention something that can help you navigate these markets, especially if you're looking for the hands-on guidance. I want to show you something actually in a minute. We get so many questions asking about how we manage risk, how we spot setups, and you know, how we keep our cool when things get volatile. Like the last week has been pretty crazy, to be honest. But that's why exactly so many of our community members love being part of TTC. So it's more than just a trading group, you know, it's a mentorship, it's a community. You can see the community in the chat right now. It's a place where you can get, you know, ideas on daily trades, market insights, and real-time guidance directly from our whole team. So if you've been feeling a little bit lost in this market, or you just want to elevate your trading game with a solid method, then at a minimum, it's at least worth looking into. You know, we've got different membership levels. There's this one here, which is if you're okay with learning on your own. But if you want to be part of a community, there's this one, the first class membership, where you can get actual help and ask questions and all that. Actually, we did start something new on this channel that I want to tell you about as well. Janet, as you can see here, she's been doing these videos for the last couple of Saturdays. And what she does with these videos is she does like a weekly recap on the behind the scenes, like inside our membership, how we've led the community and all that kind of stuff. She shows like the whole team stuff, the trades that we took, the warnings that we made, and she goes over how the method that we trade actually plays out each week. So she does that for educational purposes. And if you really want to understand our method, I highly recommend checking out her videos on Saturdays, because it's a really good starting point. And from there, you know, if it makes sense to you, you can consider joining us to become part of, you know, those that get the real-time updates as the price action develops. So check out her videos if you want to come join us. The link to our website is also in the description of this video. So that allows me to now have a look at the 1 hour time frame to see if we can investigate what the market maker is up to this weekend. So you can see here, this is the V bottom that I talked about. Now, there was a bit of discussion in our Discord as to whether this was a W or a V bottom. In my personal mind, it was a V bottom, and I'll tell you why. With a V bottom, what happens is the level 3, so in this case, level 3 is to the downside. So the level 3 move will usually create high volume vectors. And you can see that with these 2 red candles and then the magenta one to finish it, okay? When the price rebounds back, if we're going to have a V bottom, the first goal will be to fully recover the fast move that was level 3. So if this was level 3 down, you can see that's exactly what happened here. And we recovered exactly to the top of that candle. So that's what qualifies it as a V bottom to me, and not a W formation. You do it how you want to do it. This is how I do it. And then that led us into level 1. And then we had a really boring week because we had Powell testifying for 2 days and the price did absolutely nothing. It's very irritating, but anyway, it is what it is. And now we have the weekend, which we know the weekend consolidates to keep the weekend traders trapped. So if we're to continue playing out on the levels, like sometimes the levels can repeat when repeat's not the right word. They can reset when the new week starts. So you have to keep that in mind. But if these levels are going to continue this week, then we should according to the 1 hour time frame, we should have level 2 start next, and then that will obviously hopefully lead to level 3. But here's the thing, let's investigate this weekend box now, because the way that you draw your, should I do it on the 15-minute? No, I'll keep it on here. The way you draw your weekend box is you want to go to where you can see the price mostly contained itself with candle closes, okay? And then you want to do the same to the top, but actually, now I'm going to keep it like this because really we have been consolidating since Wednesday, even though we're on, should I? No, let me just do the weekend. Let me do the weekend because it's more relevant. So the weekend is just here. And then that means this is here. Yeah. Okay. So this is just the weekend consolidation. And what you can see is that we've had this breakout already. So that's what a false move can look like. Okay. So now you might be wondering, well, if the false move was to the upside, does that mean the week's going to start bearish? And that's where we have to investigate a little bit further. So what I can see when I look at the open interest, can you see that? Yes. Is we had a big spike in this one is the open. Yes, it is. We had a big spike in the open interest. So what that means is when we broke out of that level, a lot of traders jumped on board to participate. Okay. So they could be the trap right now, but we also had an increase in volume. And again, because that increase in volume right here, gave us those vectors, that's where we assume that's the market maker showing up, because only market makers can move the price with that much of an increase in volume, especially on a weekend. So it's very tricky this week. A lot of the times what makes it very easy to spot a false move week beginning is liquidations, but sometimes they have to induce you to participate before the liquidations. And that's because when that happens, it's because over the weekend, there has not been enough participants get involved. So you can see here how the open interest was really flat all weekend. So what is potentially happening right now with this price action is that the market makers are trying to induce traders, and they're trying to induce them because not enough people have taken positions over this weekend. Why do they need that? Because when the market opens for them, Sunday 5 p.m. New York, from that time onwards, they need us as participants in order to move the price in the direction that they want it to go. If there's no market participants, they can't make as big a move. So this was definitely, what I can tell you is this was definitely encouraging market participants. We can tick that off the box. The open interest proves that, okay? Now, another thing to keep note of, and this is what the title of this video was about, the most important level that no one's paying attention to, is every week from Sunday 5 p.m. New York to the next Sunday 5 p.m. New York, we create two very important levels, and they are called the high of the week and the low of the week. And that high and low gets shifted across into the new week, and then that acts as a support and resistance. So if you're studying traditional technical analysis, you have probably learned about support and resistance. We don't pay attention to that on this channel because support and resistance is subjective, whereas marking the high and the low of the prior week, it's not an opinion, it's a fact. It's a fact the price went to that level, right? So therefore, what we're looking for this week, as the market opens, we're looking for where was last week's lowest price and last week's highest price. Now we can note when we go back, what we have to do is we have to look from after Sunday 5 p.m. New York. So it's going to be, I've got this on my time zone, but just trust me that it's this candle here, okay? So the low of the week is going to come in here at 98,970-ish. And then the high of the week, it may not be in yet because it's actually, this is the highest point of the week so far. So I'm going to show you this as an example, but just know that this may need to be redrawn if the price continues up until Sunday 5 p.m. New York. Okay, so this is just an example. So at this point in time, the high of the week is 108,500. Now what you do from there is you take your fib and you just go from the low to the high, and then you mark out 50% of that range. And that is a very important level. So that is at 103,730. That is very important because when a new week opens, actually, this is a perfect example of it. I'm going to show you in a sec. When a new week opens, these three levels become important: the low of the week, the high of the week, and 50% of the range. Where the price is when the week opens helps you to identify your start of the week bias. So if you don't know this trading method that I'm talking about, then what was I going to say? I forgot it. I forgot what I was going to say. If you don't know this trading method, then don't worry, because I forgot what I was going to say. But the point being that when price is closest to the high of the week in a new week, most of the time, not all of the time, but most of the time, you're going to see a rejection when the new, that's what I was going to say. If you don't know this method, after the false move week beginning, we tend to go into a 3-day trend on smaller time frames, right? So that's what we're looking for when the week opens. So therefore, if we're closer to the higher of the week, you would expect that most of the time we will reject and head lower. When I say most of the time, the only time that won't happen is when we're in a very strong macro environment. So that's up to you to decide if you think that right now we're in a strong macro environment, because I don't. I personally see the third touch to a flag. So it's good in the future. Third touch to a flag on the daily time frame. It's good in the future. It's not necessarily great right now, right? For a small time frame day trader, that pullback could be a very decent short whilst you're waiting for the flag to create the higher low. That comes into like layering time frames and whatnot, and that's where it gets really complicated. But just remember this rule. So when we're closer to the high of the week, when the new week opens, more often than not, we will pull back into somewhere around 50% of the range. When we're closer to the low of the week, when a new week opens, we will pull back into the 50% of the range. Now, most of the time, if that level is going to hold, we will see it repeat. Meaning, look at this. So last week, this was the low of the week. It was created on the last candle before the market opened. And this was repeating the level with a higher low. So that's how you would have known last week that the low of the week was going to hold because we got a higher low, and therefore the price was likely to make its way back to 50% of the range. And then once it gets there, you reassess. Look, we had a very strong breakthrough of it. You reassess and you decide if it's then going to make its way to the top of the range. So we basically have to do the opposite of last week this week, because now we're at the top of the range. So therefore, if from here, if this is the false move already beginning, what you should be looking out for now, and you need to be looking at this on lower time frames than what I'm on the 1 hour, but a 15-minute or a 5-minute is going to be good if you're going to be awake to catch the false move. What you need to be looking out for is now exactly this, where it repeated the level, exactly this, but opposite. It repeated the level, but created a higher low. So on the opposite end, you're looking for it to repeat the level, but create a lower high. Now, if it does that, then that's where you will start to kick in what I said earlier, where I said sometimes when the week starts, the levels start again. And that would mean that you're no longer expecting the 1 hour time frame rise too. Okay, so it really depends on what's coming next, and the price action isn't there right now for me to tell you. So the best thing I can do is tell you what to look out for in order to build your bias for the opening of the week. And so therefore, if we do get a confirmation, it may look like an M formation. It may even end up just consolidating and then just break down. The main thing is you don't want to see price return into this vector here. If you want to be bearish, if you're looking for shorts, you don't want to see price return into too much of this vector right here. And what was I going to say about that? It can come into the zone, it can spike into it, but if it comes in and it gives you bearish looking candles, that's just where you grow your confidence that, it's going to break down next. And so therefore you would do that. Then your levels go to 200 EMA, 800 EMA, 50% of the high and the low of the week. That becomes your 3 targets for your trade. And then if the week does open that way and everything plays out that way, then that's where it would likely take 3 days to do that. Don't get hung up on the 3-day thing, because it's 3 days or 3 levels. So don't be like, you said I was going to go to Wednesday. Like, it may not be exactly Wednesday, but point being that that's where you would expect 3 days or 3 levels, and these become your targets. And then depending on what day of the week that is, you start to look for reversals after that, which that's way too in the future. Now, let's talk about the potential for a bullish bias. Yoga retreat. Oh, yoga retreat is your name. I thought you were telling me to have a yoga retreat. I'm like, are you telling me I need to calm down? Anyway, I get it. All right, let me just see some of these comments quickly and make sure you guys are on track and I'm not confusing you. Funny you say this high and low of the week. I just did a huge back test on this. Yeah. It's a very important level. High and low of the week, high and low of the day, and initial high and low of the day, your most important levels. Okay, so let's talk then about the potential for upside instead, because we have to, right? Because at this point in time, it is possible that this breakout creates a higher low, and then we're going to expect further upside. It's possible. The reason why I say it's possible is because we have induced traders and we don't have liquidations yet. So therefore, we have to stay open-minded. It is what it is. I know, like, I get a lot of comments on my videos of people being like, she said maybe this way, maybe that way. Do you know how hard it is to get on YouTube on a Sunday when the market isn't open? Like, do you know most technical analysts don't do it? Like, at least I show up. You know, I show up to try and give you a heads up. No, I can't predict what's going to happen, but I can tell you what to look for. And that's really the only point of my videos. I'm not trying to be that trader that's like, we're definitely going here. Yes, I called it. Everybody needs to call me a genius now. I don't have that ego. I'm just trying to teach you how to read charts and make good decisions. And that's it. So anyway, rant over. We have to have a look at the potential for upside because this move didn't create liquidations yet. So it's a pretty easy one for me. If the price is going to continue to the upside from here, it's going to retest the top of the board meeting and the 50 EMA. It's that easy. It really is that easy. So it's going to look like this here. Okay, that's where you would have a bullish bias for the start of the week. And then if you got that, that's where you're going to believe that we're having level 2 next. Right? Looking for this is way easier than looking for the other one. But yeah, you do have to be open-minded to both. Okay, now I also I said that I was going to explain something to you. I told you to remind me to come back to it later. I just have to remember what it was. We were talking about liquidations. I know it had something to do with liquidations. Oh, yes. I was saying about the V bottoms. So the reason why we're getting V bottoms and not clean and easy W formations or very easy reversal patterns is because right now what we're in is a futures traders market. You can argue with me. I'm not wrong on this one. We are in a futures traders market. That, my friends, is another sign that we're in the late stage of the cycle. Why do I say we're in a futures traders market? Because of the liquidity. So when you have a look at this chart, you can see here, it's very, very clear. If you've never seen a chart like this before, this chart is showing you the liquidation levels of all the open positions. And the brighter that the lines going across are, the more liquidity there is there, okay? And that liquidity, you assume, stays there until price returns to it and takes it out. So when you have a look, see how it was bright here, price returns to it, it turns dark purple. It's liquidity wiped. Even down here, you can see it. Here you can see it got taken out too. This is a 2 week. This is going back to, this is just over 2 weeks. And now you can see that we've got a very big bright level here at about 108. Wait, let me say, where is it? 108,960 to 109.5, okay? So we can see that there's a very bright level there. Now, if this is a trader's market and the market makers are just hunting liquidity, then what's the easiest thing to track to build your bias? Tell me in the comments. It's such an obvious answer. Tell me in the comments. Come on, I'm waiting. I'm waiting. Short squeeze. I think my comments are delayed. I think it's coming through later than what you guys are writing. But essentially, yes, we are looking the easiest way to and this is why I'm going to be honest with you. This is why our trading strategy, the TBD system, this is why it's worked so well this entire cycle. And I'm not tooting my own horn. Believe me, there are many trading strategies out there, and there are times where ours doesn't work the best. That's the truth. Like when we're in a very clear macro trend, you don't really have to worry about liquidity, or it changes. The liquidity spikes, they take out the upside instead of the downside. But right now, not right now, like literally for the last year or 2 years, this whole cycle has been about liquidity and taking out futures traders. And that's why we've nailed it on this channel all for 2 years. Like we've literally nailed the levels because we're just chasing liquidity and squeezing to get the liquidity. Yeah, exactly. So you guys get it. So therefore, this should be, if you're trying to trade, this should be one of the things that you keep very close eye on is current open positions. This is a CoinGlass website, by the way, guys. Just CoinGlass, and you go to the liquidation heat map. Okay, it's free. Everyone can look at this. So all we're doing is tracking where is the largest amount of liquidity, and then you use price action to decide if and when you're going to get there. But it's more likely when you look at this that we will go for the upside before we go for the downside, because the downside liquidity is here at about 105k, right? So we're closer to the upside than we are to, it's kind of 50-50, but we're closer to the upside than the downside. So then we want to have a look at buy and sell orders, okay? And this one is Market Monkey. Also free, but I think you can pay for it. Now, when we have a look at this, the difference is that this is telling you where the current high level limit orders are. So it's not open positions. It's big money looking to take a position. And you can see that they're not looking to short until about 108,650 to about 109, and then even up higher at about 110k to 110,300. Okay, so you can see again, it's just the changing color of the lines that you're looking for, and they're the two big levels that they're looking. And look, that could very easily be this is level 1 pullback, that's level 2 pullback, that's level 3, right? And then it's over. It's very possible that it turns out that way. When we look below price, we don't see a heavy amount of buy orders, and that is also a problem. And why? Because there's nothing to cause a bounce at this point in time. You need high level buy orders below price to cause a bounce and then expect the next level. So when there's nothing there, there's a possibility that we end up in a reversal. And so that's why I was saying that you need to be open to the idea of the M, and that this level 1 is it from last week, and we start new counts. Okay, so if you're tracking this, again, like I said, it's free. If you're tracking this, keep an eye if buy orders come in. That's going to be very important. That's where it's going to help you to identify if this is the first side of an M formation and we're going down, or this is a pullback to create a higher low and we're going up. Is that helpful? Do you guys what happened to Trading Life? Trading Life? Oh, Trading Light. God, I don't know what happened to it. Honestly, I can't get onto it either. And it's been long enough. So I agree with you, man. Very annoying. Okay, so tell me in the comments. I want to know your opinion. After everything that I've just shown you, what is your bias for the week ahead? Do you have one yet? You're allowed to be neutral if there's not enough price action to make a decision. But tell me, are you bullish, bearish, or neutral? Let me know in the comments. And let me see if there's anything else that I want to talk to you about whilst those comments come through. When entry. Yoga retreats online is short. 15-minute RIT. Yeah, that's this on the 1 hour too. Bearish. And here's my bias. All right, whilst those comments are coming through, let me just quickly tell you about our exchange partner for today, Phemex. If you're looking for a new exchange and you just want to snag an awesome bonus, we have teamed up with Phemex for this exclusive promo that you're seeing on the screen now. There's 13 days left. It's a great exchange. It's super reliable, been around for a really long time, and they've hooked us up with some pretty cool sign up bonuses just for our community. It's a pretty good deal, but you need to know how to redeem this you need to know how to redeem this. So let me just quickly show you. In the description of this video, you will see down here, it says what Phemex is giving you. You just go and follow these 5 steps. You have to use this link to join up. It's the only thing that will get you into the campaign. Then you have to register and fund your account. Then you have to go back to this link and click join now. That's what's going to enter you into the campaign. So just make sure you follow all 5 steps so that you can be registered for that offer. And if you're actually in TTC, if you don't know this, if you actually are one of our members right now, if you do that, you also can potentially qualify for a one-on-one session with me. So if you're in Discord, go into Discord and look for the details on that. Now, let's talk about the important news of the week. This is from our macroeconomist, Jared, inside the Discord. I'm just going to read it straight up for you. The highest priority news event is Thursday. So again, once our direction is picked, we would not expect midweek reversal until Thursday. The news event that he's talking about is US non-farm payrolls and weekly US and EU claims. What else is he saying? Tuesday has several items that can cause volatility. We've got Powell participating in a panel discussion. What else? We've got JOLTS job openings and ISM manufacturing. Wednesday, ADP can cause volatility. Thursday, ISM could US NFP reaction. This could accelerate a move or act as a reversal. And then Friday, there's a bank holiday in the US. I think it was last Friday we had a bank holiday in the US as well. It was very boring, but that's what happens. But that could mean that Thursday is more impactful. So I would definitely be looking around Thursday for midweek reversal, whatever direction the market takes us at in the first few days of the week. And then Monday is the last trading day for June. Historically, stocks and crypto can see a pullback or weakness in the first few days of a new month. So there you go. Maybe that is leading to our first side M formation. If you want to track all of these news and you're not inside TTC, you can get it on forexfactory.com/calendar, and you can just filter it down to the red envelopes to know what's important. Okay, I think I basically have told you everything that I wanted to tell you today. Let me just make sure. Yes, I did. And so, yeah, I hope that this video gave you a clearer picture of where we are in the cycle and what to watch out for this week. Let me know in the comments if it did. Just remember that trading is all about preparation, patience, and staying disciplined, and sometimes just enjoying the ride. If you found this video helpful, smash that like button, subscribe if you haven't already, and ring that bell notification so that you can make sure that you don't miss out on our future videos. And don't forget to check out the links to our TTC memberships and that Phemex bonus. Thanks guys for joining me, and I will see you on the next one.